Hello guys, going to do another update. I'm sorry I've not done one in about it's about 2 3 weeks, 2 weeks now, and I've had a few people message me asking for updates, but just had a little baby, so I've taken 2 weeks off to concentrate on that and working extra, so I've not really had much chance to do anything, but definitely well due a bit of an update because there's quite a lot been happening. So we'll start off. This is the S&P 500. We've got RSI down at the bottom. One thing you can see straight away is that we're now oversold on the daily, and this is correction territory. It's not to say it can't keep going. If you go back here to September 2020, it did pop through twice on, a little bit higher. So there's definitely room to the upside for the RSI. However, now is a zone where we'll be thinking, okay, we're going to need some sort of a correction, and if we can get back down to at least this kind of level, really, 31 for the RSI, that's potentially going to be a good buying opportunity. The S&P daily doesn't seem to like going into oversold territory, so would not expect too much of a downside, but it is possible. There's a lot going on. Now this is sort of my long-term trend, and we failed, came back, and now we've just melted upwards, if you will. So there's been quite a lot that's been involved in this melt up. Now I'm probably not the expert here, but if you are following Sam Carson or Jam Quast on Twitter, he's absolutely brilliant with this kind of thing about Varna floors, and the window of opportunity to the downside opened on Monday, and it should be open until the 26th. So what we're looking at now is we've got this melt up phase, but at any one point for the next week-ish, we could have a very big red candle and a correction. If we don't have that, the chances are we're probably just going to keep continuing at least a little bit longer, for a few more weeks. Unfortunately, as much as I hate the fact, if we don't get this correction in this next week, and start seeing a really reasonable move, then that does suggest that the market is strong, whether you agree with it or not. It suggests that it's strong, even if it's just from bullshit margin debt and quantitative easing and all that kind of stuff. It still suggests some stability within the market, unfortunately. So with that in mind, where's this outlook looking for the week ahead? Well, we've had this move up. It's very similar to what happened back here, so we are kind of seeing this, and it's reasonable to expect this kind of move next. We're going to get this kind of correction. If we do, the target's going to be probably at least, I'd have thought 3,800, but a good sizable correction will be anywhere down to about 3,600. These previous peaks here, that would be a really good, decent correction. So ideally, if we can get a correction down to somewhere in this room, this move, and find and hold this area of stability, that's going to be beneficial for the markets. But for now, I probably wouldn't buy at this level. It's not to say it can't keep going up, but literally what we're at intraday, we hit 4194, so 4200 is kind of the key figure for rejection. So the upside just isn't worth the risk of trying to get in at this price. You're better off waiting and seeing, because the chances are we'll probably spend a few days rolling over here and then boom, straight down. I mean, if we only go back down to here and it's a retest before I move upwards, then fine, so be it, but I won't buy at this price. Now what's VIX telling us? So VIX is the volatility index. Now it's just been suppressed like crazy here. It's been pushed down, but despite that, it's still nowhere near all-time lows. And we've been having this melt up, and we've been having these big moves to suppress VIX, but it's not really doing that much. It's down to it hit the lowest point intraday was 15.4, which is certainly the the lowest time it's hit in quite a while. But if you go on to, let's have a look at the monthly, for example. You can see here, typically it spends a lot of time a lot lower than this, somewhere around the 12 range, with the lows as low as 8.6 here, about 8.5, 8.6. This is kind of the good range, if you will. So I'd say we're hanging at the top of it. This is going to be a support level, if you will. Look for VIX starting to move up again. If I go, I don't think it's going to give us too much on the 4 hourly, but we'll have a look and see if it does. It's not giving too much away. It's just kind of trending around this level. I mean, it hit a bottom here on 9th. Where are we? We're on the 17th, and it's still at that same zone. So potentially it is a bottoming phase. It kind of, you can see that downwards trend, but it's also, you know, bottom there. So potential, you know, that could be changing, but we yet to see. Now, if we go on to the US dollar, this is the interesting one. Everyone knows that's my favourite. We are on the 50-day, and we've had quite a nice pullback on this. Yeah, you can see perfect 50-day moving average here. And this is a really good move. Now, obviously, the bears are going to be looking for the dollar to move down, but until it moves probably lower than about, until it gets back into the 89s and below 90, I would say that this is still bullish. And we can still see that, you know, double bottom. Although ideally, obviously I want to see it hold this 50. And whilst you've still got this move over with the 50 and the 100, you could potentially go down to the 100 as well. I mean, there's a bit more support at this level. You can see a peak here, another peak here, another peak there. So 91 is going to be a good support level if it does go down to there. What we might find is we see like an intraday thing where it just blips down and then rockets back up again. If it does, that's a pretty good indication, because that suggests that, you know, people are buying the dollar and we're expecting the dollar to go up. So that's going to step in line for your next move, higher in the dollar. And I think it's about time that it does, really. It's not to say it's going to, but it should certainly be considering it. Nasdaq, let's have a look. So the Nasdaq's probably going to be quite interesting. Yeah, you can see we've rallied higher again, same here. We've not oversold in the hours either, with, not that it means an awful lot, but, you know. Let's have a look. Was there a bit of a divergence? Not really. No, there's not really any divergence in RSI here to go off. It's pretty much a similar story. It's not really giving anything unique that we wouldn't expect to see elsewhere. SPX is exactly the same. Let's go on to TLT. So TLT, 30-year Treasury bonds. This is going to be one of the key indicators of the market. I mean, the only people that buy bonds are the bigger institutions, so it's a lot more. It's a lot more reliable. It is obviously manipulated with the Fed buying all the bonds, but it's a very straightforward indicator. There's not that much manipulation from retail jumping in and all that sort of stuff. And what we're seeing here is we have seen that move that I thought we would get, where we, I remember this line from my last update. We said, oh, we'll go through, and we've gone through. We've just gapped up to here, so we're now touching the 50-day moving average. We've touched this level, so if we can get above it, there's probably a little bit longer that we're going to hold. I mean, looking at this, it's saying potentially March, but once it starts to pick up again, this is probably going to go pretty quick and start moving up. And I wouldn't be surprised to see Fed upping its bond purchases pretty soon, which I know that itself could potentially move things higher. But if we have a look at the yields, let's go for the 10s. Yeah, so the 10-year, and I was saying it way back here when we first hit this, we've probably peaked and we're going to go lower. And it was like, no, we're just taking a bit, we're going to go higher. Well, okay, we might go higher, but we've certainly hit a level of resistance, if you will, and that's not looking favourable. But if you go back onto the daily, and you have a look at what's happening with the bond prices, you can see we started to move back, and this is like an all-time low, if you will. There's not really, if we go back, yeah, so it sort of goes down to this level here every time, and it doesn't go below this level. It starts going back up, so it's reasonable to suggest that we're probably going to get the same thing again, because every other time that's happened, it's never just gone down to this level and stayed down at this level. It always goes down to this level and, you know, comes back usually pretty quickly. And we had a bit of a double bottom there, but nothing serious. So it's reasonable to suggest that we're probably going to be seeing at some point bonds going up here. And if it does, that could obviously trigger your chaos, particularly if we're expecting this correction next week. That could be a good indication. And what we'll see is this spike up, which is similar. You can see March 2020, what happened, it just spiked up and yields crashed. So we're at a bit of a turning point in a critical level. That's not to say we can't go down and double bottom, but at some point, yeah, price is going to go up, yields are going to go back down. Market's probably not going to like that. Let's have a look. Gold, let's go on to gold. Okay. Now, we all know that my long-term trend is down here. I will be buying gold if it touches this line. If it touches this line, I am piling in because it's a pretty strong line to go on onto the weekly. And you can see, it absolutely loves this line. It's loved it for, over a decade now. Was that 2007 at least, possibly even longer. So the way I see it is we're moving up in these sort of bubbles, if you will. So you've got this boom, bust, and this is where you get this gold rush. Oh, we're going to get inflation, No, it didn't happen. Oh, it's not quite the same. Everyone takes profits, goes back down again. Oh, we're going to get inflation. No, it's not quite happening. And then what we're getting is, this is your actual inflation rate. This is your 2% increase over the amount of years that, pushing gold slightly higher. I don't know if it is 2%, probably not, but you can see this is why, we should trend higher anyway. At least at a 2% rate, because apparently inflation is 2%. So, I mean, that's not to say that we're not looking now at this first correction, because look at the peak that we had here. We could be, arguably, we could be here. We could come back down again and boom, go straight back up. So it could be that we go, straight back up. I could get it wrong, and that could be what happens, but I don't think that's going to happen. I think it's more likely that we have come up and we have peaked and we're coming back down again. We could see something a bit more like this, where we come back down, consolidate and try back up again. So up from here we might see an attempt higher, which I've been talking about. But ultimately I do think we're going to go down. I think the reason why this rally perhaps hasn't been, particularly this section of the rally, hasn't been quite as great as it has, is because there is a lot of people that are piled into Bitcoin and cryptocurrencies. So, gold's got a huge market cap. So it's not going to have a monstrous effect, but it is going to have a effect, because it's still cash that otherwise would have gone into gold that's now in another asset instead. So I think it's reasonable to suggest that it's going to have an impact, and that without Bitcoin as being this speculative replacement for gold, we could have at least seen the 2,200, maybe a little bit higher. So that's one thing to consider. But yeah, ultimately I'm still looking for us to go down to here. If I can go on to look at the 4 hourly, see if that's given us a bit of information where we are. So I want to see if there's any buying pressures. Okay, so on the 4 hourly, we're touching that over. We're touching the oversold. It's likely we're going to see some sort of correction or consolidation here. And there's a bit of resistance there, so we are at a resistance zone. It's not to say that's not going to happen, but we've broken out of this pattern now. Well, we're broken out of it. It can still be a fake out, it can still go back down again, but I think from here, I actually wouldn't be surprised to see us trying to rally a bit higher, come back correct, and then just trade sideways for a little bit. And I even wouldn't be surprised to see us actually have just one big attempt higher before we come back down again. But it depends, and there's a lot of other variables. And one of my arguments was that obviously gold contracts can be used as collateral, and with liquidations happening, gold can sell off as a result of that. If you've got a business, you've earned whatever amount of cash and your business goes bust, you're going to be selling all of your gold holdings, so that's going to affect that. And we are starting to see that. I'm in Australia, and I noticed this just yesterday on the news, that was it, the end of March was the 12 month where you couldn't lose your business. Everything was, you don't have to pay any bills yet, insolvency doesn't matter anymore. And then that was up at the end of March, and now we are mid to late April, and we're starting to see the effects where businesses are now actually not looking brilliant. So that's one thing to consider, and we are, by that logic, getting to the point now where, okay, there might not necessarily be any liquidation issues in the market if the Fed are bumping money in, but we could still see that insolvency phase, and that's going to be more of a steady grind down. But there's kind of a few possibilities here, because the other option, the other side to look at it, is that if you go back into the weekly again, this is my trend, but there's nothing to suggest that we can't just go down and trade sideways for 12 months to 18 months or so. Even if we don't go down fully, we could see if we just held this zone for now and maybe went back down to the bottom where we were the other day, 1600 odd by 2025, it's 2 years away, so we could just see this consolidation where gold just doesn't really do anything. But I think it's more likely we'll probably see something like this, where we liquidate off and then just consolidate sideways. And really, this zone is just one big consolidation. We're just down here, back up, and we peaks up here, and this is kind of your range. So we might see another range setup, something like this around here between the 1600 and 1800 level. I think this is where we're going to be stuck, barring any crazy changes to monetary policy. If there are any changes, that obviously is going to change my thesis completely. But for as long as the system is the way it is, that is where I stand. Tesla is going to be an interesting one just to have a quick look at. Let's have a look at this on let's look at the 4 hourly and see what that's telling us. Okay, so we started to move higher. There's clearly a trend line here. Right, so yeah, okay. Arguably, this is your trend line. We've just gone down, we've corrected it, we've tried again. Everyone's bought this trend line, it's starting to move higher. So what we're looking at now with Tesla is this is your key zone. If we can start moving higher, we need to break this. If we can break this and have a clean, solid break, then that's brilliant. But even a break above it could just be a fake out before we come crashing back down again. At the moment, there's so much going on. But yep, the trend is your friend. So for as long as it's going in this direction, buy these and there and there. So if you're not bought it now, it's too late. I probably wouldn't buy. I'd probably consider a short if it gets back up to this level. Set your stop somewhere around, I don't know, 9:30. Give that a bash, and then hopefully what we probably would see, I won't be surprised, is if we come back here, we'll get a correction. Come back down, we'll probably touch this line again. We'll touch it around here. If we can do that, touch this line, I'd give it a shot at buying it, because it's probably at least intraday going to go back up to here at some point, even if it does fail and go down lower in the end. So that's worth considering. Now on to Bitcoin. It's Sunday afternoon here in Australia, and this big Bitcoin correction has happened. So now you can see this is my long-term trend, and I've been saying for a couple of weeks now, Bitcoin's over, it's over, it's over. And in fact, I said it at this peak here, is where I said it. I think I initially said it here at this peak in February. And so what we've had this peak, we come back down, and we've had this kind of a slightly higher peak. It's not massively higher, but it's higher nonetheless. Gone back into this consolidation plane, gone. But what we've done is we can see here, we've clearly gone for a fake out. We've gone, oh yeah, but Bitcoin's never going to crash, it's going to go up, everyone's bullish. Oh, you got it wrong, Adam. You got it wrong. And then, straight down, we've now broken this trend. Now, okay, that's not to say we're not going to go back in, because you've been an absolute idiot to think that all these Bitcoin fanatics aren't going to look at this as the perfect buying opportunity. So it's reasonable to suspect that we're going to go back up. But what you need to be asking is, why is this going down? Who's dumped that much Bitcoin that it's affected the markets like this? Because it isn't retail, because they ain't never going to sell. So someone who holds a lot of Bitcoin has sold that. And what that makes me think is the markets are not happy, or someone somewhere is not happy. There's a lot going on. Now there was this talk of banning cryptocurrency because there's been a lot of money laundering, and there's an article that's just come out on CNBC. So potentially, I don't know if someone's heard about that first, and that's why the institutions have gone and dumped it. That's a potential thing. But what we're likely to see now is that this is probably going to be the peak on that basis. And I've been saying it for a while. Bitcoin it's absolutely useless. I've used it to buy things. It's expensive, it's slow, it's inefficient, and it doesn't work. Okay. I don't care how much you love Bitcoin, it doesn't work. Now, the idea of cryptocurrency is fantastic, and I do think cryptocurrencies are the future, but Bitcoin isn't the future. That's like the prototype, you know what I mean? You go to the Geneva car show and you see the latest Mercedes prototype. Absolutely looks fantastic, it does everything that you want it to do, but it's got some old crappy engine that doesn't do anything because it sits there on a stand and doesn't move. Sometimes they don't even have an engine in them. They're the prototype. What you wait for is you're waiting for 4 or 5 years down the line when something goes into production, and then even then you tend to wait a couple of years because the first example has teething problems. And it's no different with cryptocurrencies. So whilst Bitcoin is going to be the grandfather, and And whilst it's always going to be remembered, it's not the be all, the end all, and I don't for 1 second think I will ever be going out and do my weekly shop with Bitcoin. Quite simply because of the fact I don't even think the governments will allow it. They'll just create their own and ban it. I mean, it's already banned in China. They're banning it in India. Half of Africa's talking about banning it. And if you sit there and go, oh well, those countries don't matter. What about Europe and the US? Well, actually, those countries do matter. Literally, 85% of the entire world population live in either China, India, or parts of Africa. So, best part of 90% of the planet can't use Bitcoin. So straight out of the bat, its entire purpose is gone. Because you can't do trade with China, the biggest GDP, the biggest economy on the planet. You cannot do trade with them in Bitcoin. So, game over, I think. So what am I expecting now? Okay, potentially, like I said, we could see this rebound. I do think it's likely that that's probably going to happen. Crazy things do happen in bubbles. However, ultimately, I think 30 is a possibility, but I think we need to get past 45 first. You can see we're going to have, this is your support now, and I think it's reasonable to say it'll probably go back, it will hit 45 and then 30. If we go back onto the, so look at that from the weekly and see if that gives anything more. That's fucking ridiculous. I don't know, I honestly think that we're at least going to come back down to 20. And I wouldn't be surprised to see us come back down to 7 or 8, because I think it's useless. I think at some point, all these institutions are going to save money, take the money, take all the profit, because they can't do anything with it. And they can't, so they're going to take the profits and they're just going to put the price back down. And the only people that are going to be left are going to be, criminals or people that are using it to buy stuff on the black market or whatever, or the Bitcoin hodlers. So, it's going to give it some value because they're going to say it's got value. But I think a reasonable level is probably down here, personally, under 10 grand. It's not going to go to zero. I would have thought, but I think it's going to go back down and probably sit at this level. And I wouldn't be surprised to see a range set up here further in the future. I think not horizontal ray, horizontal line, where I think it's going to be something like this. We probably don't go above 12 and maybe don't really go below 2. But it remains to be seen. Crude oil. Now, I'm no crude master. Go speak to Art Berman if you want to know everything you can about oil. However, one thing I did say a while ago was that we're probably not going to go much higher than this. And my reasoning for it was that long-term trend line, which if I can go back, in fact, I'll just quickly jump onto the weekly again. So you can see this long-term trend line. Everyone's talking about, inflation, and my view was that, no, every single time we've hit the top of this, we've rejected it. And so far, again, like I said, we popped through it, but straight back down. So this trend line is not happy. Arguably at some point we're going to go and shoot off to the moon, but I think that's probably further down the line. Looking at that, it's 2024 maybe. I think that's a reasonable amount of time. Gives the US time to start a war somewhere, to pump prices up. But I think it's reasonable to suggest now that we're going to be at least range bound here, and we might see oil going between 40 and 60. And I know Art Berman was saying that he's pretty happy around this kind of 50, 55 level. So I think it's pretty reasonable that we're probably going to set up a range here and start moving across. So I think this line probably is going to be over at some point, but only because we're going to consolidate higher. And then, further down the line, we might start rallying up a bit higher. Something will happen, and oil's always needed. So that's your update on oil, I guess. Let's have a quick look at the 4 hours, see if it's given anything. Let's have a quick zoom in. Wick plus. Okay. Yeah, okay, so I'm probably just going to get rid of that line, so it makes it a bit easier. We've made an attempt to go higher. It doesn't seem especially strong. but you can see it's like a nice little sort of cup and handle formation actually, almost. If we can come back down, well, to be fair, if you're bullish on oil, you probably want it to come back down, retest this 50 period, or at least somewhere around 61.3 ish, and then move higher. It's like a cup and handle formation. But like I said, there's a lot of things to consider with oil, and I'm not an oil expert, so I wouldn't hold me to that one. LQD, which is the corporate bonds. So we had this big sell-off. I'll go on to the daily because it looks better on the daily. So we had this big sell-off in corporate bonds, bit of a rally, but now look at this, we've rejected the 50-day moving average perfectly and starting to move lower, so that is not looking good for the corporate bond market. And well, you can see what happened in March 2020 with the corporate bond market. That didn't go particularly well either. So corporate bonds not looking brilliant, and that's obviously going to affect things like margin debt as well. And abilities to lend and loan, and banks, all these corporations have to pay off bills, and it's obviously one big complicated mess. There's quite a lot involved in it, but I think that's pretty exciting, shall we say. Now with move, I'm just going to move that back. This was my trend line. In fact, I'm just going to move that out of the way. What have I done here? Move that out of the way for now. So move had this move up, and then we've been talking about it coming back down, but if you look, it's not actually really come down that far. It's still sat at this high level at 60 now at the moment. It's just almost like a spring coil. So I mean, look, one thing's going to happen. It's either going to go down, it's going to go up. No shit. But I think it's reasonable to say it's probably going to go up, and that would obviously go in line with my thesis as well. We're sort of getting this triangular pattern, which typically is quite bullish. And you can see, it went up here, and it kept rising and then dropped back down again. And rather than it being a rising, it's a dropping. So we're now at the 50-day. This is your critical level. If we can hold this zone, then potentially we're going to see this move up. And I don't know, I'm only hoping that this move in Bitcoin this weekend, because Bitcoin never moves on a weekend, it always moves in the week. So the fact it's moving on the weekend is quite interesting as well. Hopefully that could be an indication that something's about to happen, because it's about bloody time that it does, to be honest. Right, let's have a look. I'll probably leave all the rest of that. So there's your update. If you've got any questions, just message, let me know. I'll keep doing my research and see if I can update more things. There's quite a lot going on with credit data, a few different policies coming out, so yeah, we'll get on it and we'll see. Cheers guys.